where are we at? Last month of the summer, hopefully, right? Last week of the summer. Tomorrow's the last day of August, and we roll into Unemployment Friday. So you guys that aren't in the Edge team room or the trading room, then these meetings are the only time you kind of touch base with us. Just know that Unemployment Friday is this Friday. It's a big number, and it's going to be a market-moving event if it misses. The thing is, it's this conundrum effect where if it's a real strong and bullish number for the economy, it's usually for stocks, but it's going to maybe price in this September meeting for the FOMC as the one that they're going to hike, so it could be then bearish. There's going to be a conundrum to these numbers going forward, the bigger ones. We had a strong consumer confidence number today at 9, and we couldn't rally. We end up breaking net, not right after 9 Central, but we end up going through the overnight lows and whatnot. And it was a strong consumer confidence number, 101 versus 97 expected. So consumers are confident. We get some manufacturing data with Chicago tomorrow, ISM on the first day of the month, which is Thursday, and then that jobs number on Friday, which will be a big one. But just keep track of the conundrum. Good news is bad news based on the FOMC hiking rates, and we'll keep an eye on the Fed funds futures, which starts pricing in a higher and higher probability of a rate hike at the next meeting, which there was really no chance of it until Dudley about 2 weeks ago started yapping, and he was a dove, sounded hawkish, and now Yellen and Fisher on Friday at Jackson Hole were also hawkish. That's coming out of last week. Even though we shrugged some of that off Friday and rallied, the last couple sessions so far have been staying far enough away from the contract highs to keep it a little bit more two-sided than it otherwise would be. But you got to be careful. You got to know where you're at on the map when you're long and when you're short. Know where you're at so you're not getting stuck after the move up long or after the move lower short. That's tough because it could be like the worst part about trading is when you're right and lose money. Like your bias is right, but your location was bad and you had to take heat and then it worked. Well, chances are, I know the way I trade, chances are I'm going to scratch that winner, eventual winner. And that's what you do when you're a little early. Is you got to take a little heat and then it goes. That's no way to trade because you're eventually going to screw that winner up. You're either going to cut it way short, you're going to scratch it and then it's going to work, or sometimes you're going to let the little heat turn into a lot of heat and then that's a bigger loser. So just know where you're at on the map, especially in these consolidation where it moves and then consolidates forever, it seems. You got to be patient. Play near the bottom of consolidation if you're long, near the top of it if you're short. So that's just a good, helpful advice going through this summer. Things will pick up and be better. But again, this doesn't mean there was no opportunity in the last 1, 2, or 3 months. And that's why we're going to bring Dave, Peter, Jeremy, Tom, George. The whole cavalry is here today. Usually when there's that many guys and me, I try to call my friends for help because I'm going to get beat up. But these guys like me, so it's not about that. But these guys on Dave, and I say this because Dave typed in there, do this for this guy, this guy, this guy, that guy. I'm like, whoa, they're after me. But this is these guys are the pillars of the Edge team room. And if you are in this meeting today, you have access to that team room. Jump in it. You don't have to talk and contribute. You eventually will. This is the great stuff that comes out of it. When we put guys that are diamonds in the rough, or as like Carl, just black rocks that we haven't been able to find great value yet out of, although he is, as I joke about him, been very helpful in there also. But that's what a room of good minds, when you bring them together, what it yields. So with all that, let me kick things over. First, make Dave an organizer. Actually, I make him a presenter. Yes, I do. The screen share is going to kick over to him, and as he adjusts to what screen he wants to share, I'm going to open the mics. I'm going to open, hold on, Dave. I'm going to open up the mics too, just so you guys know, so you're not coughing or sneezing. Tom K., you're opened. Tom, you there?
Got it.
All right, tested. Peter's back. Nice to have you back, Peter. You there?
Yeah, I was told a box lunch is going to be provided.
After the session.
I forgot about that part.
Yeah, after the session. We'll see how it goes. All right, Jeremy F., right?
Yes.
Good afternoon.
Jeremy, how are you?
Doing well, thanks.
Good to see you. And then George H., Wisconsin George. Still growing potatoes, George? Or is he flying? George, where you at? Can you hear us?
Maybe he's on a be right back on
That's
the
cool.
room, so he may have stepped away for a minute.
All right, I'll mute him until he comes back so he doesn't come back in.
Oh, now he's back in. There he goes.
He's back in. Let me unmute him.
Yep.
George, you there? He left the cockpit.
I think
You need a coffee.
check
Stewart
here the mic, George. You're coming in the room.
he can't get around the drink cart. So his mic is on. He must have muted it on his end. All right. So you could control that, George, yourself. If you muted it on your end, it looked like you did. There. You should be able to be heard. You there?
So George is, so George,
You could hear him in the edge room, but you can't hear him in this room? Is that what's happening?
correct.
Yeah. I don't know why, though. It's got to be on his end. Why would it be on his end? Let me think. Everyone else.
Oh, it's on his end. You don't have to do anything yet.
All right.
He's working through it. So I tell you what, while George is getting that sorted, let me just go through the intros on this thing. So the reason that we have a large group in here is that, wow. The reason we have a large group in here is a lot of people contributed to this. Anthony, you even contributed to it, whether you know it or not, and you're about to know what you gave us. But what we're doing in the team room is taking ideas and integrating different people's ideas in different charts, and there are a number of really interesting things that have happened, and this is one of them. So the chart that you're looking at is a combination of the three-way delta that I did a long time ago, a zigzag chart that George contributed, the base idea of having just imbalances visible. I stole from you, Anthony, and we also have the VWAP. So let's go through the elements on the chart. So first of all, the point of all this is to find imbalances, to find areas of support and resistance, which is what we care about. So the bottom here is, this is just delta. This is our old friend delta, and the zigzag chart is showing the change in delta from one level to the next. So that's what, going from this point down to this point, it went minus 6,000. So that's what it's telling you. The next chart up is a 4P&F. It is all the trades. It's got boxes around the prices so you can see the price action, but nothing shows up unless it's a 500% imbalance. And so the point of all that is to filter all the stuff. I mean, if you look at a P&F, it's just a whole bunch of numbers. This one's a whole bunch of numbers anyway, even with the filters on. But it's a bunch of numbers. And so the point is, I mean, I'm colorblind. I have trouble sorting stuff out, and so I did it this way just to make it all go away if it wasn't in an imbalance. The gray bands, those are my price levels. Then you've got the VWAP, the day session, and the Globex VWAP. You have the same thing above in the top pane, except this is for trades greater than 14 contracts. So this is showing you what the bigger players are doing. And then on the right side here are our old friends volume delta. So this one is the last 30 bars. The second one's today. This one's yesterday. Then we got a 5-day. So we're looking at imbalances. And I saved some shots from today to show you how it works. So this is pre-market, and you will see what we're looking at is the string of buy imbalances across here, where I'm moving my cursor. And so that string of imbalances is at 78. So what we're seeing there is every time it gets down to 78, a bunch of buyers turn up, and it's been happening repeatedly. One set of these imbalances doesn't mean anything. A whole bunch of them in a line starts to make a difference. So you have this set at 78, so it came back down here, and I bought 78. Now the risk on that is it's a two-tick risk. If it gets back below here, if it trades down to 77.5, I'm wrong. So I'm in at 78. I'm wrong at 77.5, and let me show you what happened.
That's a nice tight risk. I like it.
Let's see if I can get.
What else I like is you're doing that is the 30 bar delta, so that even drills down into more relevant time than just the overall day.
Right.
Delta profile. That's the alert level. Those that didn't watch alert levels revealed, that's an important class to watch from about 2 months ago. All right, Dave, go ahead.
So you will notice as we got to, so I was long at 78. I got I don't know if it was a 2 or 3 tick scale pretty quickly, and then it kind of came back against me. But look, it didn't go. It went back bid 78, but it didn't go below it. And the open happens, and boom, I was offering plus 5 or 6. Actually, it was plus 5 because of all of this imbalance here. I didn't want to be fighting with that imbalance, getting past it, and so I took a 5 on the second half. If I'd had 3 on, I'd have kept another one for this. But you notice that this was the perfect setup for you buy the 78. You got a limited risk, and you know where you're wrong, and boom, there you go in the open. You get paid. Let me show also. You have the same sort of line of buyers and sellers or buy imbalances in here, but these are the bigger players. So the bigger players agree with what everybody's doing, and they have the big buy imbalance up here at 79.25. That so you're going to have to get through that. Those are guys that are longs and potentially want to get back out when they get to zero. So you'll notice.
And I don't mean to interrupt you, but the 14 greater than 14 and above are just that instead of like the 200 or above. So it's going to show a lot more, but it's going to filter out anything below 14 then, right?
Correct.
Okay.
And Jeremy and George are doing a lot of work in different sizes. And if either one of you guys would like to contribute, please do. They're doing a lot of work in different sizes, and they're seeing more of it with. Well, Jeremy, you had a number of different sizes. Why don't you tell us what you're doing with that?
Well, at this point, what I'm finding interesting is drawing a line at 29 and seeing all this filtering everything out above 29. So you can see where all the retail sales participants are getting stuck, and seeing more of the professional larger sizes of 29 and above. And it's interesting to see all the retail guys entering late and coming in early and making all the mistakes that amateurs you would expect to do so, and the bigger lots taking full advantage of it.
I like that. I've only got the 2 at this point, but I've seen Jeremy's chart with the extra.
So it would be another additional pane?
Correct. So where we've got the 2 here, he has, is it 4 or 5, Jeremy?
Yeah, I've got 4 panes. I put a monitor vertical this morning.
And so you can see what all the various players are doing. The downside, what we kind of wish we had was the reconstituted, and the CME's reporting this as to what happens from the resting order side, not from the initiative side. And so we kind of wish it was glued back together so we were seeing the initiative side and the full-size trades. We're watching that on some other stuff that's gluing the trade back together, but there's still enough here to be really, really helpful. Let's see. Let me go on to the next chart. This is 902. So the open is over here. We've traded up. We came back down onto, you'll notice there was a string of sell imbalances here on 79. We traded out of our 78s, came back and sat on these 79s as sell imbalance, and then launched up again. Came back, sat on the above the 79 again, took off again, and hit this zone. At this point, we started. This is where we started to get a little weak. The bulls were running out of gas, and they started to come back down. And so now we retraced, but we retraced back to this level. Let me flip to the prior screen. You will notice down here at 77, see these buy imbalances at 77, 77 quarter.
Mm-hmm.
So this guy is looking like potential support. So we come back to the 902 screen, and where's our support? 77 quarter, 77 half, sitting right on top of those buy imbalances that were there before. It starts trying to work its way up. It's fighting with the VWAP, all the kind of stuff, and I went long in here a time or two, and I think everybody in the room was, or most people in the room were picking off, little scalps here and there, and then it does the head fake, another head fake, and comes back down. But guess where it lands? Back on our old friend 77.5 again. So these guys are still. This is still calling out support. So now let me go up to 920. And actually, George, Peter, any of you guys want to add anything, please jump in. Now, so we get back in here. Here's that support. It tests back up, but we're back into the 80s. And it just can't get through here. Got a sell imbalance here. You got another sell imbalance here. If we go back across, looking at 80, look what we have here. We got a sell imbalance there, a sell imbalance here, some buy imbalances where these guys will be stuck if we don't get above it. So this block of guys right here, this block, and it's the big guys too. This block of guys up here are going to be stuck if we don't get through it. And guess what? We don't get through it. So that takes us back down to here. Now, Anthony, you asked in the room, did anybody get long down here? Tell me, actually, I think the question was, tell me nobody got long down here. Well, I did get long down here, and I got long down here because of that imbalance there, this imbalance here, this imbalance here, this imbalance here. So I got long, got the first scale off almost immediately. I mean, it popped right into there, get paid, and then it comes back off.
After a few rotations, I said, tell me nobody got long in there. So right before it went lower, I didn't want anybody long. But what's awesome about Dave's answer, and there was a couple other guys that answered me. Yeah, I did. That takes a real trader where you don't have to admit that you got long because it wasn't either good or it was or whatever, and you still admitted it. Those are real traders. That's all we talked about in the break room, in the bathroom, at the prop firm, is about losing trades. We didn't have to talk about them, but that's what we talked about, losing trades. Because, hey, if you're not consistent, you're never going to be able to kind of assess how a strategy is working. So what were you long when did it stop you out eventually?
Yeah, so here's I went long in here at 3/4. I took a +2 or 3. And then I was holding the stop right under here. So if it gets to there, if it gets down to 74 3/4, I'm wrong. So the second half, I got a 4-tick stop on it. Not a big deal. I've already got one. I got a winner out of the way. So at this point, what's my risk? A tick or two. I forget what the scale was, but it was either 3 or 2. So my risk is nothing. And so it sat and fought and looked like it was going to do it, and finally it traded down through 74 quarters. I was done. Right. So yeah, we wound up being a really small loser.
And the other thing is it started to tail off before it went down. The DAX, I think this is the move that DAX led lower, I think. I don't know. I think it was the one. For some reason, the DAX led it. It just got slapped, and then oil went through 46.95 or something, and that not Iraq comment, the Iran comment came out that got oil pretty bearish when they had said that they were going to increase output. They're going back and forth in their comments. But oil and stocks looked a lot alike in the way that they were moving early on. So it was an ancillary. But still, good trades earlier, playing the bottom of consolidation where those greens are. And this is a good trade. I mean, this is your loser, and it really wasn't a loser.
Yep. Yeah, I mean, there's a tick or two, so that's a rounding error in the deal. So it comes back off, and all of these guys are now going to turn into potential resistance. You got all of this imbalance that's turned up here. But still, we're looking at the profile, and I still want to be long down in here. Let's see. Let me bring up the next one, that was 920. This is going to be 955. Let me try to remember what happened in here. Yeah, okay, so I still wanted to be long down here, and then we got this, and I decided I didn't want to be long anymore. I want to be short, because I'm looking at this imbalance and these imbalances, and this, so you get these sell imbalances, and we're below this, and now we're rotating up against this thing. So I wound up short up here, 74, 73, I don't know, high 73s, and took an immediate scale again. And now I'm sitting and waiting with a stop right here and a cover sitting down here.
Well, you see him defending with the imbalances, the imbalances from the last chop. So put your cursor on the last chop. You're right there. And then to the right a little bit, you see them coming in, quickly selling, and looking like they're going to defend that with quick selling that comes in.
Yep. So I go short here, come down, get a quick scale. It thrashes around a little bit. Remember, my stop's up here, so I'm fine. If it goes wrong, it's going to be just a small loser anyway. So it gets down to here on this rotation, and I'm sitting in the rooms, and I said this in the room. If I wasn't short right now, I'd want to be long right here. And then I looked at it again and said, why am I not long right here? So I covered the second half, and I went long right here, like right there, which was then followed by.
That was brilliant. I've said that so many. If I wasn't long, I'd be short. Or if I wasn't short, I'd be long.
And that was,
That's brilliant.
And so here's what happened with that. Wound up getting the scales off, and I was done. I had a meeting I had to get ready for, so I kind of stopped there. There's one other thing that happened that I neglected to mention that was back here, which is, I'm actually a little embarrassed to admit it, but I'm going to tell you. So we'd gone long, and several of us had gone long in the room down here, taking the first scale off, and we're up here laughing about how he was going to baby bird off of the longs that were up here and going to shoot back down. And instead of selling it, selling my last half, I didn't. I sat and watched it just come right back against me, and I felt like a moron. But it was good. It was good analysis. I just didn't act on it. So
I remember you saying in the room, "I'm long," and it was in that. If you take your cursor down, it was coming out of that gray zone, right there.
Yep, 73, I think it was.
And I said the 75 halves are going to be a magnet. That's not bad. It's going to magnet up to there. And I think 75 quarter was the high of that print.
Yeah, but when we were sitting there laughing about the baby birds getting whacked, and then gave up profit by not closing the position, or the last half of the position. But anyway, it was still a good morning for me. So that's the end of what I have in slides. But George, Peter, Jeremy, if you guys would like to add something, I'd sure give you the opportunity, because you guys had some great trades in here too. And if you want a different slide put up, a different screenshot put up, let me know.
Let's start with Tom, and you don't have to, Tom, but do you want to share a
Tom,
screen?
I didn't do that. Sorry about that.
Add anything?
You know what? So the screens that I have, I don't have pictures like Dave has.
Okay.
I mean, I can tell you what I did.
Perfect.
But so down, let me scroll it.
If you want to give me a time and tell me where to point to, I will do it.
Yeah, hang on one sec, Dave. I'm going to scroll over. It was down when we touched the low, and we were all looking for the 72 quarter area anyway.
So that would have been right in here, probably.
We go up, now going across. So, let me go over to your chart. Yeah, so I was looking at the 72 quarters. I ended up with the 72s when the 721 in green. Let me see, what bar is that? It is on my time, Dave. It's on a 10:30.
So that should be right in here.
So there was a 721 green that popped up and then went right back down. You know, and I saw I was underwater for, 2 ticks? And then it popped up on the next big bar up.
And that turned out to be a little bit of heat, but quite a good entry.
Yeah.
Yeah, tick or two's not really heat, is it?
No, and we were all looking for that area anyway, so all we needed was just a little bit of confirmation there, and that's it.
No, that's excellent. How about Peter?
Dave, you want to point out, right where you got the Chris right now, I believe that's at that 920 area.
That's about 9:30.
9:30.
9:20.
9:30.
9:20 is right back here. This is 9:30.
Right. I think I made the comment about I saw. I'm a little bit newer to using this chart in particular, but I had it up on the screen. I noticed that that bottom pane there, where he's got the volume breakdown, the zigzag, that volume breakdown is just a classic volume breakdown indicator, and it started to diverge and go sideways down into that area there, which is why I was confident that we were picking at the right area between 72.5 and 71.75, which we had used the profiles to kind of at least get us an idea where we might want to take a position. Then this chart here that you got up is really kind of what dialed it in real tight.
And we can see if we go back to the live chart, we'll see what actually happened there, because that's back. Let's see, that's back right here, and that was a great trade right up to the VWAP. And you notice back to the live chart again, so this string of buy imbalance is still hanging in there. Delta's going up, and where are we? So 73 was our friend again.
Yep. And there's been a couple small bear raids in there that you can see where it's going to come back down. But, they keep finding new buyers. They keep finding some buyers.
And what's been great is that, for someone that might be brand new, they look and say, well, they're kind of just scalping. Well, kind of just scalping is what you should be doing if you're going to participate in a lot of this market, because it's not giving you the big runs. And then you scalp, and then when you get a layer or one of your scales off, it's not really scalping that last third or that last half necessarily. And if you take a 2-point winner and consider that a scalp in these markets, you're insane. The overnight range was 4 points. 4 points. So taking half the overnight range out, even though the day session range opened up a little bit. 2-point winners are nice winners in days like today and yesterday and a lot the last few weeks and everything else. Was there anything else, Peter?
No, it's kind of funny listening to Dave go through. It's interesting that in the edge room, it's not uncommon for most of us to be hunting in the same field, the same area. Well, I think we did have once or twice today. I think you were short and I was long. We both made money on it. But,
yeah, that's pretty funny.
But, yeah, it was, I think, I'm not sure which one you took. I think you took the one that was closer to 10 o'clock or something. Now it's still just managing on a long, and I got back in again. So this chart's just kind of good for if you want to go both ways. This chart that we've been working on, that Dave and George in particular have been working a lot on, plus I know Jeremy and Tom have done a lot on this also. This is a great chart for seeing where you might want to be able to take positions on both sides in a single day.
Yeah. Go ahead, Dave.
I was just going to make the point that like everything else, you can't use it in isolation. We're watching this in the context of a 6P&F and a profile and looking at where the prior trading has been. So if you use this in isolation, you will get your face ripped completely off.
Oh yeah, my Anthony's PNF4 chart with the filter is still it's my center chart on my screen, and I've got a couple extra panes I added to it because it's just the methodology that we've been using has kind of grown. And I still have this 6 chart also, and that's those 2 charts, they're centerpieces.
Yeah, and I don't use
on the wings.
In the my main chart I look at isn't necessarily the room chart. I mean, I'm obviously looking at that a lot, but I have this delta profile on another horizontal or vertical 27-inch screen right off to the left of my domes, which I'm following this delta profile that you see on Dave's chart here on the right. The only thing I don't have that I'm going to add is the column to take the last 30 bars. Is that the one on the left?
Correct.
So that even takes more relevancy into where these guys might be getting open longs or shorts. Now, in going back to Dave's long trade, which you were laughing about that you didn't exit at 75 quarter when you guys knew that was probably resistance. Would you go back to that?
Let's see. Yep. Let me find that pane. That would be probably here. Yep, right here.
All right. So when we're, what was it, like in the 72, 73, it's a 2-point move. But yeah, so when we're down there, I'm saying that's a magnet because if you look over to the left at Dave's profile bar, the second, or I'm sorry, not the left, the right, all the way to your.
Oh yeah, no, you're doing this one. Yeah, I was looking at these, but you're right. You've got all of this as well.
Yeah, so from open shorts, which essentially comes in with a lot of red imbalance from the previous chop. But the reason why it's red, everyone should know the reason why it's red, the profile. But the reason why it's a magnet is because it's above us. And if they're indeed open shorts above us, what do people have to do? They have to buy. And when you have a winner on and you're short and you got money into it, every tick closer to that entry is another tick less you made and another tick up in anxiety. So it's a self-fulfilling prophecy if you think about it, right? The closer to a lot of open short positions that are winning positions, the more anxious buyers you have to cover to take profit. And you can almost walk it right up back to that where those open shorts got in. All those guys finally said, the hell with it, I'm not letting a winner turn into a loser, and they scratch it, and wham, it goes right back down. That's the reason for it.
You look at these. Let me add this on, Anthony. So look at these. These are stuck longs here. See all these greens in here? So these guys are buying because they don't want to give up, as you said, but it gets to here, and these guys are the baby birds going, all right, I'm almost back to zero. Get me the hell out of here.
So you got an overlap, 2 powerful overlap. One that makes it a magnet to go have to test it, and the other one to make it stop from going through it.
Well, thanks for making me feel especially foolish for not closing that long out up there.
It was 2 overlaps. Hey, you've seen it, and that's the thing about trading. You don't do what you say, and that's where a lot of failure comes in. You never do what you say. Well, that was just one example of it.
It didn't cost me much money, but it's frustrating.
It's frustrating. You see it, you got to say, let me just you got to think of it this way to help you avoid that. That happens, and the fact that you can laugh about it is great because that'll help you avoid it in the future. If you got mad about it, you'd be more likely to repeat it just to prove that you were right the first time. And that's what's funny about this business. But when you go into it and you look and you say, well, will I be more mad if I get out here and it keeps going up, or will I be more mad if I don't get out here and it goes back down? And if the answer is I'd be more mad if I don't get out here and it goes back down, then get out. You're managing how you're going to feel based on whether you do it or don't do it, as much as the structure to it. So I guarantee you, if you ask that question, maybe you'd be more mad if you got out and it kept going up. So then you did the right thing. But you're just trying to be consistent. And these charts and this technique is helping people be consistent with a better visual as to what the bottom of the consolidation is, and the confirmation that there are buyers defending it. They're coming in to buy and cover it. Who cares why they're trying to buy it? They're buying it to get long, they're buying it to cover shorts, but that price is being defended. So it might be defended again and again and again a few times before it isn't. That's a great way to use this volume imbalance chart as a great visual as where the buyers and sellers are defending and all the rest of the way you use them. Really good stuff. And it was just a collaboration of all you guys, right? In the edge room.
It was, and let's George has contributed a lot to it too. Let's see if he's got any trades he wants to talk about on here.
Well, his mic is still unmuted on my end if he wants. Oh, wait, no, he's not. I'm going to unmute him again if he wants to talk. But then it shows he's muting himself. So.
Okay, we may have some technical difficulties.
We could be, yeah, we could bring George in. All right, hold on. If not today, at a future. I've unmuted it, George, because he just typed in, says turn my mic on. But it's muted on your end. Now it's off, now it's on. So whatever you did, toggled it off and back on. Yeah, he's having problems, but that's good. We've got a lot. This is a lot of good stuff that I recorded, and we'll post back up in the track 4. We'll schedule George for a future meeting to go over how this is working. One thing I'll add, when and if, and I don't know, not if, but when we get more volatile, whenever that is, you got to be careful of knowing how many rotations and balances worked and not counting up, right, them to work again. There he is.
Gotcha, George.
Hey, sorry about that, guys.
That's all right.
I think Carl was screwing with my microphone.
Hurricane Carl.
You guys damn pilots.
Hey, if you could let me screen share, I want to share a screen that I've been using, and kind of it's kind of Dave's chart, maybe a little bit more on steroids.
Sure. Yeah, let me do that. Make presenter. You should be prompted to share a screen. There you go. Hey, you're an expert.
Okay, so basically what I did, it's you hear about tape reading all the time, right? Look at the buys and sells and all that. So basically what I've done here is this top pane is any trades over 249. This one here is any trades between 49 and 50. This one's between 24 and 50, and this is unfiltered. And the imbalance is 500%. I've found, for instance, back here you can see I've got some green box shaded, and let me blow that up and show you what I'm looking at when I'm looking at this. And they've become support and resistance levels because of it. So when I get all 4 screens lined up with a buy or a sell imbalance, that's one of my triggers. And that area will also become support and resistance throughout the next couple days. So for instance, this one, and like last week, I think I had 12 trades using this. I had 1 loss, 7 full profit, and 4 of them were 2/3 profit, with the rest being stopped out. So what happens then is, so I trigger my trade depending on where the level is. I think it was 79.25, and it was right at the open when I got long. Yesterday I got long at 71, kind of the same thing at the open. And if you notice, I went up into, see this red, the bottom line? That's another level that was red overnight. And you can see that level goes from 83.25 to 81. And that became resistance. Well, because this green level failed, I got out and shorted. You'll see what happens is that this green level here at 78.5, 78.25 will now become resistance. Mm-hmm. And I had a green level down here at 72.5, 71, which we know how that played out, was my support level, okay? So as you see, the price came down, and look at how it's supported on that line. Now, I never really got a buy signal where all four of them lined up. However, then I go to Dave's chart if I want to scalp a little bit more. So I'll be a little bit heavier on these entries, and I'll be a little bit lighter on the entries where I'm scalping for 4 or 8 ticks. The other thing that was very interesting with this is at the bottom, and these delta profiles change obviously as that happens, but we got to the support here, and you notice at what is that, 74? At 74, this one had a buy imbalance. Look at this group had a sell imbalance. This group had a buy imbalance. This group had a sell imbalance. Then when price finally did break up, and it was just when I was starting to go long, when I saw this happening, still a buy imbalance, still a buy imbalance, still a buy imbalance. And look where that buy imbalance is. It's at basically one of the areas where you would have put your station, Anthony. And these delta profiles, we find that these areas of buy and sell imbalances are really good areas to put your station lines too. But so notice how this now went green because of some of this action here. Now what it's telling me is everyone's getting on the right side, especially at that level. You see these buy imbalances all along here, and Dave had mentioned that at 73. So I went long and took profit here at just before we came online here with the edge meeting. But so that's kind of how I'm using it. There's another chart that we're working on right now that we were involved with deltas and ticks. We're not ready to share that other than the guys in the edge room yet, but good stuff going on, a lot of collaboration, and I'll tell you what, it's a lot of fun to be with these guys and learn.
No, that's great. That's great. Go over this chart again. What's the top one, top pane?
Okay, so the top pane is, so the top pane, it's a 4 P&F volume imbalance, 500%, and it's between 249 and 1,000 contracts. And so you can see the delta profiles, it doesn't show up that much, right? So you got the 5-day, previous day, current, and then the 30 bar. All these are that way. This one is between 49 and 250. And I'm still playing around with these levels, but I've found these levels to be pretty good right now, between 29 and 50. And this one, there is no filter. So in essence, what we're doing here, Anthony, is we're basically reading the tape, but on the chart.
Right. Yeah, and you're seeing where these aggressive players are coming in, and you're profiling them accordingly.
Right. Right.
No, I like it. I'm looking at it as
See, right now you can see where the sellers are coming in here, because the 75 is on the volume profile, it's the bottom of the heavy distribution, and we've been having a hard time getting through it. And right now in this whole thing, this is pretty much the bull-bear line, right? 75, because you got the sell imbalances below, starting to get a little buy imbalance coming in here, and you get the buy imbalances above. So that's a huge one. So I'll look at that. Okay, so we got 74, 75, so that's green there, there's green there. Now look at here, here's red. 75, there's nothing, there's no volume, maybe a little bit of green. So I'll be watching these to see what they're going to do. If they're going to get more red, or if this is going to start switching over to green, then we could see something changing. So that's kind of how I look at it, along with the imbalance levels that Dave and Jeremy and Peter had described.
No, I love breaking up the volume so you're getting different looks at different sizes that come in, because not everybody is entering orders if they're big traders with 200-300 lot clumps. They could be in increments of 50 lots.
Yeah, and where this really came from, Anthony, is, on your 4 PNF or 6 PNF, depending on which one, when you have the stuck shorts and stuck longs in there, we were trying to figure out, especially after you showed us the delta profile, okay, there's got to be a way to figure out, to break those guys down to really see if they're stuck or not. And what we'd really like to do, and Dave and Jeremy have been really, I think they're going to try to get a hold of Trevor on this, and they can talk about it a little bit more. I don't fully understand, but they want to try to, well, I'll let them explain, Dave and Jeremy, what you guys want to, what you'd really like to see on these charts with the time of sales.
Yeah, so the prints that come out of the CME are essentially on the resting order side. So if you've got, I'll make it math easy. So guy wants to buy 10, and the first resting order in the queue is 5, and then there's like a 2 and a 2 and a 1. Well, it reports on the resting orders. So my buy for 10 comes out as a 5, a 2, a 2, and a 1. So on the time and sales, it's in the same millisecond, so you can tell that it's all the same. The initiative side, which essentially, in summary, we're trying to show the initiative side instead of the resting order side, and CME is reporting the resting order side. Why they changed it to that in 2009, I have no idea, but that's what they did.
Yeah, so let's say it's 200, and they all get absorbed. A 200 lot is on the resting offer, right? It would show up as a green 200.
Correct, and what we often see when you get a 200 lot that will show up in the filter, and we'll say, oh, there's a big 200 lot. Well, you look at it when you've reassembled the trade from the initiative side, and it might be 500 or 600. And so you look at that and go, all right, that guy's probably not stuck, because he took out a resting order for 200, and then he took out a bunch of other guys, and he's at 500 or 600 that he just bought. So more than likely, he's not stuck. If it's 200 and it shows up on the initiative side as 200, he's probably stuck.
Right, because that's where it's still relevant, because he stood on it. It might not just be one guy that came. That's what I've said before. It might not be, when it's 200, it might not be one order. It could be 201 lots. But someone on the offer side gave it to all those guys in that millisecond. That's fair to say, right, the way they report it?
Yep, that is fair to say. And what we're trying to do is glue the initiative side back together, so we see the who initiated the offer or the order, not who was resting and waiting.
Yeah. And with just a time and sales readout, would you be able to do that?
It takes a little logic. So if you've got a time and sales with millisecond ticks on it, you can see. I mean, we've got some stuff that shows that actually does the reassembly. But I'd love it if Market Delta had that option, because all it's doing is looking at millisecond ticks and adding the stuff. If it's on the same millisecond, it just gloms it all into one trade, which is what it really is. I mean, there may be a few exceptions, but essentially, if it happened on the same millisecond, it's probably the same order getting filled against a bunch of different resting orders.
Let's set up a meeting and talk about that. Not an edge meeting, but a meeting with Trevor. Go take it from there.
Gotcha. Yep, sounds good.
Because that's a great addition to what we're trying to do here. So, great charts. I'm not going to share this with Trading Room guys, so you're not going to see it on the resource page with other charts. But if you're in the edge room, I'll imagine you're sharing the definition of this with other edge guys.
Yes. Yes.
And everybody in this meeting, they're all edge guys, and they all have the access and opportunity to go to the edge room. Don't be intimidated, because, I mean, I could see why some might, because they think some know more than others, but everyone was new at some point. Everybody was brand new at some point. Dave was one of the original guys, so maybe he wasn't, but everybody else had their first day, first week, first month, creating those relationships and introducing themselves. And that's, I mean, if we didn't do it, we didn't add guys to it, we wouldn't have found a George or a Jeremy or a Peter. And it's just more and more all-stars that that create more and more help. And then it's like someone who might not have contributed that says something that gets great minds spinning off in the direction that really comes up with a great idea. It's where collaboration always happens. But so we encourage you to go to that room, but we're not going to twist your arm to go either.
This wouldn't exist without inputs from a bunch of different people, and you got to have the right, to do well. And the first thought is, well, the selfish thought, well, do I really want to share? Well, we've got 5 or 10 guys that are in here all the time, and if all of us 5 or 10 guys are successful, there's a whole bunch of people that we're competing against. So if we team up, we win. We win as a team, and we gain from it. And so,
yeah,
the first thing you got to do is win the game. And if you've got 5 or 10 smart guys adding, the chances of winning the game are a whole lot better.
And then you open an invite for the 11th smart guy to share something. Right. Yeah, I mean, anybody who is not willing to share, you're not willing to get either. I mean, so it's like, and you're not really sharing with thousands and thousands of a public domain. It's a tight group.
That's right.
To start with. So that's how it snowballs. The guy that ran the prop firm, owned the prop firm, he even said that. He goes, when I talk to other prop firms, I share a little bit about what we're doing here, because if I don't share, they don't share. And then does neither of us any good. They share a little bit of what they're doing, we could, and we're not competing against each other because it's such a deep, long river of opportunity and money continuing to change hands with every contract that you see printed on. And that's just this market. You take into consideration the cash markets, the individual stocks, the options. Man, it's just infinity. It's a deep, long, dark universe. But so those that are in this room now or in the future, if you're in this meeting rather, have access to it, email me at edge@marketdelta.com, and then we'll put you in the funnel to get you access to the, we call it the team room or virtual office. It's essentially what Track 6 is on the site. But this was a great meeting. I had Woj scheduled to come, and something had come up, so he's going to come either next week or the following week, talk about some of his specific setups, I think, which would be great. But Dave stepped in, and this turned out to be like Woodstock, Wasn't expected to be big, but turned out to be a good time. Historic. Thanks, Dave.
You're welcome.
Thanks, George. Thanks, Tom. Thanks, Jeremy and Peter. Appreciate it, guys. I'll have this recording uploaded in the next few hours if you want to watch it again. Like I said, edge@marketdelta.com if you want access to the team room that Dave was talking about. But this was great. And I don't know if, Dave, you could see it, but some people are also thanking you guys for sharing. So great stuff.
Awesome.
Glad to hear it.
All right.
We'll see you guys all next week.
Perfect. Thanks again. We'll see you guys either in the team room or trading room or next week or all three. Recording will be up in a few hours. So long.